a specific lesson. Instead, we want to talk straight markets, talk about certain things that are going on right now. Platinum, silver breaking out. We talked about this the other day with SVM, some of these names that have been back in focus. Once again, 20-day moving average, and then just kind of screaming higher. The story of the day remains the exact same thing. We continue to talk about what's going to happen with this bill that's happening in Washington. Silver's at 36, clear upside to 40. This is just one of these situations where you just got to remain long this. As we note, all roads point toward more monetary inflation over time. So we have to play the momentum that is associated with that. And as I've noted over and over again, just follow the EMA with silver. When you get these opportunities, you might have missed this one, but just pay very close attention to the 20-day EMA and we'll look for this curve right here. And as we start to move higher, again, $5, $6, $7 moves on the SIL. If you're using the leverage in that, the SILJ, which is an amplified junior miners ETF, these are the types of moves that can happen. This is 12 up to about 16 in a matter of like 2 weeks. So forgive me, 1508. Now we're overbought right now on silver, but again, overall, very strong in the monetary inflation hedges. S&P 500 is having some trouble getting above that 6,000 level. That's kind of the range-bound expectations that we've had going back a couple of weeks. There just is not enough broad liquidity in the system at the moment to provide that support. We're going to talk about a couple of things this morning. We're going to talk about the Fed is unable to count inflation. Whew, this is a doozy of a story. Is it time to short Tesla? Yes, it's time to short Tesla. Nvidia fatigue. We'll talk about how to trade Nvidia as well. The energy reversal. We are seeing energy prices moving higher. We are seeing WTI above that 50-day moving average now. What are some calculated trades that you can make? And then a little bit of a small cap insider focus. We're seeing a little bit of buying in some very small companies. What does that mean? And where are the opportunities ahead? Good morning, Doji. Good morning, Raskin. And there's Eric. He's here. He made it. Eric's been hanging out with us for a couple of years now. Looking at S&P 500 momentum improvement. Weakness is in Tesla. It is very clear as we drop under that 20-day moving average. And the question is there a little bit of a trap right now in Tesla? How do we trade that? What is the better focus? We'll talk about that momentarily. FCX, NEM, a lot of the mining companies, strong momentum breakouts. Our watch list today, G-Park. This is a activist story right now. This is a company that was in our FNG score focus, popping above that 20-day, popping above that 50-day. Now that EMA, it's roughly $7. What do you do now? Buy it, hold it, and simply set the stop back at 7. Right? Or set the stop back at the 20-day EMA, which is around 666. Forgive me. So there is a poison pill focus here, shareholder rights plan that's being adopted at the moment. Company had backed out of a deal recently. This is just one of those little tiny companies, $353 million market cap, very cheap, by the way, right? Look at the PE ratio, 4.5. We drill down into that EV to EBIT. The overall, this is an oil gas play that is in Colombia. We're just looking for momentum to return a little bit. You stay above this 20-day, good things can happen. If it breaks down, we get out of the way. So you got about 25 cents downside. You got upside probably to around that $8 level back where we were in those March, April highs before this big sell-off started. So looking for $1 upside versus about 20 cents downside. GeoPark in focus. Ranger. RNGR in focus again as well. Ranger Energy Services breaking above its 20-day moving average, 1% above that 20. Looking for a trade there later today. Strong MFI, improving RSI, and everything looking pretty good on the MACD. And then NWPX. What do you do? NWPX, Northwest Pipeline Company, another company that was on our list. Basic Materials, steel name, small cap, $400 million market capitalization, but everything starting to appear very nicely with the ADX. Looking for some improvements in volume. Again, right back here at your 20-day moving average as your exit. You're looking for a move potentially back up above that 50-day. And if we can get rolling on some of these pipeline companies, or forgive me, some of these steel companies, it's going to be a good year. All right. So the Fed cannot stop inflation. What does this mean? Well, this is a fun story. This is one of those things where I just bang my head against the wall very, very hard, because just to explain the CPI and what is going on, the Federal Reserve, or forgive me, the Bureau of Census and the United States government. Just put this into perspective. I have a rocket ship in my hand. You can track all 150 billion transactions in the world by Visa. You can, I don't know, look at every single purchase that Walmart has been made at Walmart over the last decade. You could see prices in real time. How does the United States government actually calculate inflation? The answer is by hand. They do it by hand. And if that doesn't sound insane to you, it is. The Wall Street Journal reporting this morning that our inflation data is now less reliable. It's reliable because the government officials say we don't have enough people to walk into stores and write down prices. The BLS, the Bureau of Labor Statistics, employs hundreds of enumerators who fan out across America monthly like it is 1936. They walk around and they track the price of Wranglers and the price of eggs with a clipboard in Toledo. And if this doesn't make you feel insane, keep this in mind. The BLS said that they had to guess on 29% of their price data using something called different cell imputation in April to explain this, because they couldn't find the price of cargo pants in Cleveland. They just used the price of pajamas in Phoenix, and then they went to the bar. This is important, right? They're blaming Doge. They're blaming everything else going on in the government. Why are we doing this? What is the point of this? And I go back to a very important story about myself. When I graduated from Purdue's agricultural program, I had a job interview with the USDA, and I would have been reporting the WASDE report. I would have been in charge of the communications behind the single most important price report in the United States agriculturally, possibly the single most important report before World War II. And I had three things that I chose not to take that job over. One, my retirement would have had to been completely in T-bills because they were worried that I was going to engage in insider trading. Secondly, and keep in mind, insider trading, one of the biggest scandals ever happened at the USDA, involving the shades on the windows and whether or not the price would be high or low compared to the expectations. And that was a thing. Secondly, there was the basic fact that I was not going to ever be able to write about the markets again, because they were afraid that I would disclose to the public somehow through some code in any article that I wrote about the markets, whether it was about oil or anything else. Somehow I would be sending signals to somebody in the ledger in the way that I constructed paragraphs or whatever to tell people whether or not I was giving them away financial information. The third was the guy who was in charge of wheat prices, like literally their top wheat analyst, hand to God, did not know how to use a computer. He did it all by hand. CPI is what decides our treasury yields. It influences treasury yields, Fed policy, every COLA adjustment in America, union wage negotiations, your tax brackets, and $2 trillion in inflation in protected bonds. And we do it by hand. Now, why does this matter? Because in this environment, again, Visa can tell you what you've paid for gas for the last 15 years. It can tell you, ADP can tell you the payroll of 20% of the workforce and knows wage inflation better than anything else. And we're still doing this. And this points out to the broader story. Like, when these stories break, here's why they matter. They matter because it tells us again that the system is actually broken to begin with. Debasement in the currency is not reflected in CPI. CPI numbers are off. There's a lot of variance. It's very difficult to trust it. But that said, the market still operates on this illusion, which is what can lead to dramatic swings, dramatic changes, dramatic shifts in expectations. I continue to argue the most important thing that you can do is continue to protect yourself against debasement in the currency, focus on a sovereign strategy, focus on cash producing assets, focus on companies that produce and make real stuff, focus on gold, focus on silver. This is insanity. These are the types of things that transpire. And once again, three things. Just one, make sure that you stop believing this stuff. Secondly, use the sovereign strategy. And third, laugh. Laugh about it, because if you don't laugh at the absurdity of the world's leading economy that runs the reserve system, operating on inflation like it's 1936, I promise you, you will weep. All right. So, end of that monologue. Let's dig into Tesla. Tesla, this is an interesting little chart right here. Whoops, there it goes, falling under the 20-day EMA. And this is where it is time to flip over the narrative and start to take a shot at the downside here. Tesla, when it breaks under its 20-day EMA, is ripe for short. First test will hopefully be the 50-day EMA. Tesla is expensive to short if you're buying puts, but it is not expensive if you are using the TSLS. And the TSLS is the Dirixian Daily Bear ETF. This is 1-to-1, so there is no decay in this. Very important. So we're breaking above this. We're at 804, and last night, this is a beautiful little trade when it comes to the leverage. You're going to wake up, you're going to look at the market, and you're going to look at around 10 o'clock today. Look at the in-the-money call, the $7 call on TSLS. TSLS has its own options chain, and these options only expire once a month, third Friday. And there will be volume because there is volume around these levels. Yesterday, this finished the day at 85 cents. 85 cents. What did this close at yesterday? 782. Nobody's paying attention to it. So this is a way to use the leverage of the inverse ETF simply by buying an in-the-money call and effectively not having a ton of premium of time put into the option. Now, if you want to do that, just buy this individual fund, trade it around the 20-day. You're 3% above the SMA, right? There's your stop. 3%, 3.8%. But now that we're above the 20-day EMA, Tesla looking very weak. A lot of questions about Mr. Musk, a lot of questions about this rally that we have had, big momentum rally that we just had above that EMA. 250 took us up to 365 in about 6 weeks. And now we are starting to roll over, and now the funds are starting to go in the opposite direction. Question for Garrett: when the VWAP on SPY hits the higher or lower third deviation of the close, is it actionable or wait to the next day? It is a wait to the next day. It is a wait to the next day. We don't do anything overnight with that trading strategy. Very good question, but we'll talk about that momentarily. Treat every day as if it is a new day. Trade what is right in front of you. And Don talked about this yesterday with zero date, the value of zero date, trading zero date, why it's important, how much opportunity is coming. Don't think about tomorrow. Trade what is right in front of you, and then when the bell closes, shut off, go do something else, come back the next day, right? Okay. So looking at the TSLS, I'm going to be in the $7 call on the TSLS for the third Friday, so the 20th. Remember, Juneteenth is coming up on the 19th, so the markets will be closed. So just keep this in mind. You're going to have one less day in terms of any options that you are trading. Just keep this in mind, and what in terms of that final week and decay and everything that comes with it. We are heading toward triple witching, so I will be in the $7 call. I may buy the 6 as well. I am looking to go the opposite direction on Tesla. Very short, tight stop on this. Very important. Keeping it right back at the 20-day SMA, which is a 3.7% move down. And then we'll turn around and we'll look and see. All right, so what was the Tesla inverse? You're looking at it right now, TSLS. For those who are a little bit bolder, TSLQ is in play. TSLQ is the leveraged ETF. This thing is like rocket fuel, no pun intended around Tesla stock. But if you're looking for a little bit more juice, keep in mind you have to keep very tight stops around the 20-day EMA. Speaking of rocket ship stocks, Nvidia. Seems like we're getting a little bit more focus right now. When we look at a company like Tesla, there is a direct relationship between Tesla and a number of different stocks, but we do see some relationship between Nvidia and Tesla, given their size and given the focus on AI and alternative energy and EV and everything that comes with it. If Tesla goes, Nvidia probably will follow. It has followed in the past. Nvidia has been bouncing around. You've had a big move, 106 up to 140. That's about a 35% move in the last couple of weeks. These things do peter out. And once again, same thing. Just like Tesla has, Nvidia has an inverse ETF as well. This is leveraged a little bit, 1.5x short NVDS. But once again, you're not taking aim at it just yet. You want to see a couple of different things. We talked about yesterday, the RSI, the MFI, the ADX, and the MACD. I have two ADXs on here for some reason. Ignore that. But we want to see the RSI, the MFI get up to 50, and we want to see some movement on the ADX that would give us a little bit more confidence. We're not there yet. This is not a short, but when we get there, 10% move on the inverse. That's about a 5.5 to 7% move on Nvidia. Remember, we got the leverage involved here. So this is where we start to trade this. We start to focus again around that 20-day EMA. We'll dig deeper into that as it comes. I'm looking for some weakness on these stocks as we head into Third Friday in 2 weeks. What else we got? So that's 3. Energy, XLE. So XLE has been chopping around. The energy sector, as we note, currently below its 50 and its 20-day moving average. If we can get above this, we may have something going. We have a lot of geopolitical noise happening right now, particularly around Iran. Iran, with the potential to develop a nuclear weapon, or at least they seem to be getting close. We have a lot of concerns right now about some other elements in the Middle East. And once again, the escalation around Russia and Ukraine. Do not speculate on war ahead of time. You want to follow the momentum of the geopolitical tensions. Right now, there is still ample weakness in the energy space. We need to see more stimulus out of China to really have a lot of comfort. I just encourage you to watch the OILU. This is the inverse ETN that we've talked about with energy. It has been a sideways trade for a month. And once again, sometimes no trade is the best trade. Sometimes energy trades sideways for a month, 2 months, and then we get these periods of just bounce and volatility. So with the OILU, you are in no man's land right now with the RSI around 46 and the MFI at about 38. The optimal times to trade this are ascending 20-day EMA when it is oversold and we see a positive switch on the MACD on the daily. But right now, you can see nothing here to trade. We are getting a little bit more noise and a little bit more focus here. We still do want to continue to focus on the midstream. This looks like consolidation, energy transfer, EPD, TEAF, which we've talked about, the Tortoise Sustainable Social Impact Fund. All this stuff is trading sideways, but a lot of it is kicking off cash. And that is what we're looking for in this environment, something that can beat inflation and something that can keep us and something that can allow us to generate cash on a monthly basis that we can turn around and trade. Finally, I just shut that by accident. That was dumb. Finally, small cap insider focus. Let's take a look at insider buying this morning. Key thing around insider buying, paid very close attention to, is smaller cap stocks. So insider buys, looking at all buys, we have seen some purchases in companies like Patrick Industries, Traeger, Team, Vroom. This is all relatively new insider purchases. We want to pay very close attention to the insider buying that has transpired over $100,000 if it comes in. And we'll look at the current screener right now on SEC Form 4. the current insider purchases on the 10% and looking specifically at energy. Oh, forgive me, not energy, just all stocks. TKO Holdings, another $500,000. Oyster Enterprises, Vestas, Stars Entertainment, Kochav. Key thing here to keep in mind, we are always looking for these rotations to value, but we're really looking for at the end of the day is the cluster purchases. So we're going to pull the top 50 purchases in the last 10 days. And you can see BRT Apartments has had $1 million in purchases. President, CEO, Senior Vice President, 10% owner. All of this is relevant because BRT is I believe, single family and apartment REIT that kicks off quite a bit of cash. BRT Apartments. Been shopping around. This pays a yield of 6.2%, $300 million market cap. So small cap stock and beaten up quite a bit coming off the backside of last year. Did not get crushed in April. I mean, I really thought some of these REITs were going to be moving even lower and that there weren't going to be any bids. But this has found support down around that $15 level. Kind of a longer term play. You can see that there are these purchases that have been made in clusters over time in the last few years. This purchase right here coincided with that big downturn we had last year during the money market spasm that we had. This came during the gilt crisis. So there's been buying during crisis, and that's something that I obviously like to see down here around that $16 range. If you like the long-term play of the apartment space, this is one of those things that's going to kick off cash. This is a necessity. It's an inflation protection play. This is the type of stuff that the sovereign funds invest in. Of course, this is a very small company, but BRT Apartments Corp, 6% yield, paying off $1 a year, and you're seeing sizable insider purchasing on this stock. These are the types of things that I like to see, right? I want to see a lot of owners, insiders, buying their stock because that gives me confidence in their policies and their expectations moving forward. But I also like the fact that every quarter I'm going to get a dividend. And I'm going to take that dividend, and that's some of the cash that I'm going to use to take calculated shots to the upside. Not just on BRT, but I'm talking about trading Tesla. I'm talking about trading Nvidia. This is where I'm going to get my money, like my trader's money, my speculation money, my ability to have that extra $100, $200, $1,000 to speculate to the upside. So in this case, BRT becomes attractive. It's going to be paying off that yield. There are a lot of other things, closed-end funds, all different types of things that I want to own the assets for the long term, but I want to have that cash that I'm going to be able to generate. And then on a quarterly basis, and in some cases on a monthly basis, like TEAF, for example, I'm going to get a distribution. And that distribution will then become some of the cash that I will use to take more calculated shots to the upside, like TSLS. Is it going to work out? It might not. But I do know that right now, as I look at this, seeing this 20-day moving average, seeing the fact that it is still cheap to trade this in the money, yeah, that is the type of thing that I'm going to take a shot at, because my downside might be 25%, but my upside could be 200, 300, 400% in a very short period of time. I do not necessarily. So that's a very good question, Les. So for example, with like Energy Transfer and EPD, I do reinvest the dividend. With TEEF and some of these other things that kick off cash on a monthly basis, I will just use that cash for the purposes of speculation. And then if it works out, I'll buy more TEEF. I'll buy more stock. This is just a way to, kick off cash. And if I lose it, then I don't really face the tax burden. These are things that I want to own anyway for the long term. I'm looking to arbitrage the short term moves between the net asset value and the underlying assets. But I like the fact that I'm being rewarded for long-term ownership and good assets, and then at the same time I'm going to receive some sort of stipend that I can use every month for the purposes of trading, of taking shots on things that could have asymmetric returns, and at the same time, relatively limited light downturns or limited downturn. So It all comes down to style. FSCO, for example, which I own a lot of, which is a closed-end fund around credit opportunities. No, I dividend reinvest this because it's literally one of my favorite things in the planet to own. It's not going to last forever. It does face a lot of challenges, but I do like that yield kicking off 10.3% right now. All right. So as we look at the current state of the market, we got 10 minutes left looking at other forms of insider buying, broader insider buying to selling ratio. We have seen a little bit of a pickup in recent days on that 5-day moving average. That is strong, but obviously I want to see the insider buying to selling ratio, that 5-day moving average up here. So not instilling a ton of confidence, but it is good to see that there has been a little bit of a pickup in buying. We do want to pay attention to a couple of things, though. I do want to explain something to you, that it's not just about the insider buying to selling ratio. Do pay attention to the number of filings, right? So up here, you have the 5-day moving average of filings, and that had shown back here on April 10th that there was a significant amount of activity around insiders, in addition to the insider capital overall. In addition, though, right now, as we look at this market right now, we can see that selling is very, very high on a 22-day moving average. This brown line is the 22-day moving average of selling. It just peaked on June 2nd. So this is kind of where we have to have a little bit of a contrarian view of the market, start to be a little bit guarded, and start paying attention to things like the MAGS, right? The Roundhill Magnificent 7, currently hovering about 2.2% above its 20-day moving average. The FNGB, which is one of our most important signals around momentum, is currently 11% above its 20-day EMA. But keep in mind, that is not as high as you think it is. In reality, it kind of does reflect the MAGS, which is really just kind of holding on right now. It's only going to take one down day to really cause a lot of flutters and concerns in this market. We probably are not going to see a 2% day anytime soon unless we are under this 20-day and we start to see a little bit of volatility pick up. But for right now, we are at 19 on the VIX. If you are a black swan style trader, if you're going to try to be the first person over the wall, go out a couple of weeks, go out to the end of June, go out to early July. Again, with liquidity starting to show a little bit of fluttering and concerns in this market, go down on the SPY and find the thing that is $1. Find whatever the S&P 500 downside put is 3-4 weeks out at $1. That becomes your black swan trade. That becomes your hedge in this environment. Don't really like crude, don't really like WTI. We're seeing the XLU under pressure as well. That's a little bit concerning. The XLU is currently right flat at its SMA, simple moving average, and right at the 20-day. When this breaks down, things tend to go awry pretty quickly, particularly in the S&P 500. The XLU is a pretty good indicator of liquidity in the market. We had that sell-off in December, and then we had the big move down in April. For all the focus on utilities, people like to rotate into that. This is a little bit of a signal of concerns and questions in the bond market. Aside from that, paying very close attention again to what's going on in Europe. We've been in very strong momentum conditions. We've been along Europe. We've been along Poland, looking at the DAX. Capital just continues to flow into Europe. The monetization of Europe is going to continue to accelerate. The debt expansion in Europe is going to continue to accelerate. And Lagarde coming out and suggesting that that Europe should have the reserve currency, which is insane to me if they want the problems that the United States has having the reserve currency. But if that were the case, and if we did see that type of monetary expansion, these countries are going to do well. And you could sit here and you have to keep something in mind. It's very important. We say all the time that the economy is not the market and the market is not the economy. And then when we talk about the European markets, people say, well, the German economy is struggling because of energy costs. It's the same thing. Who cares, right? If liquidity is expanding and if capital is flowing there and domestic liquidity is increasing, their markets are going to go higher. It doesn't matter. It's just the way that this works. So keep an eye on this type of stuff. Keep an eye on EWG. Keep an eye on some of these other countries. Don't try to be first over the wall. Follow the 20-day EMA. It has just been pure momentum this year. It has been pure momentum. We broke under that 20 and then we came back up. This broke above the 20-day on April 14th. U.S. market momentum did not return until April 23rd. So these are going to trade differently. I am still long Poland because long Poland, if it breaks under that 50-day EMA, I will be out. Comes back above that 50-day, I will be back in. I am long Poland. Huzzah. All right. Did Trump consider the time difference? Oh, boy. Oh, boy. It's going to be one of these fun days. Good morning, Garrett. When you are looking at Tesla for below 20-day, you are actually looking at the TSLS. No, I'm looking at Tesla, right? Tesla is under its 20-day EMA, very, very apparent, and it's under its SMA, 4.3%. Interesting point yesterday. I was asking Chat GPT, hey, what do you think the biggest stories are in the market today? Just asking it, just testing it, seeing what it's got. Interestingly enough, it said that Tesla was in a liquidity trap. I didn't see anything anywhere that would suggest that. Nowhere in the news, nowhere in that type of market analysis. But it kicked back some interesting points around this, saying that the stock had bottomed last year, timeline 138. You had a narrative shift. Key things around this. This is just very fascinating to see how that ChatGPT can come up with these types of ideas. It said that a trade setup. I literally asked it, what do you think is a good trade setup for June? And it said buying the 30 put for July and selling the 33.10. And how fascinating it was that it came up with that trade, because once again, 330 to 310. That's trading the 20 and the 30 EMA, the 20 and the 50 EMA. So, it seems like it's interesting because I'm legitimately training ChatGPT to follow everything that I write. And resultantly, it's starting to become a little bit more customized, and recognizing that, I focus around these levels. The question now becomes, what are the things that I can create, things that I can train that will recognize opportunities for me and encourage trades? And then from there, it becomes a question of how do I screen it? How do I have confidence intervals, things along those lines? So we're going to be talking about AI and using some of these tools. This was really one of the first times that I had really pushed it to not just utilize my risk tolerance and the types of tools that I use when it comes to trading, but actually generating really solid ideas. And this argument that it had, I find this fascinating. It's saying that Tesla is in a liquidity trap. Tesla has become the poster child for market structure dysfunction, with retail traders flooding into zero-date calls and institutional investors quietly trimming positions. Tesla's stock is increasingly driven by gamma flows and synthetic momentum, not fundamentals. Well, I will agree with the synthetic momentum side of this. What I want to ask is, whether or not, what do you think, Don, on the impact of gamma flows? We got Blake coming in right now. Somebody coming in off the top rope to tell me to shut up. It's 9:20. But I just found it interesting. Sharp rallies and dealer hedges followed by violent reversals when the exhaust flows. This is not a bullish trend. It's a trap. It's one you can trade. So we're going to talk about how to use ChatGPT to customize and focus on your trading strategy. We'll talk about Claude. We'll talk about some of those other tools. I've been using this stuff for about 2 years since it came out, but now it's really been a fascinating reflection of not just identifying my voice, not just identifying the things that I write about. I run virtually all of my conversations that I do with you each morning through some of these tools. It synthesizes things, finds patterns in the way that I think and I talk. And then if I can build the necessary tools and the necessary bots, then what I'm going to be doing is, focusing on Tesla, focusing on, the companies that have the strong F&G scores, and looking to modernize this and streamline this to make it easier for me to identify opportunities and ultimately take action. So the less that I have to do in terms of preparation, the better I'm off. If you train ChatGPT with your writings, do you worry that you are creating an echo chamber and confirmation bias? Very good question. Yes, absolutely. And again, it's not like I'm training it to write something and then I'm publishing it. But certainly it is important for me to, you have to analyze everything. I don't anything that I write. I don't run through Claude or ChatGPT. I write everything the old-fashioned way with fingers at 65 words per minute. But it is interesting to focus on, because if I can take this, streamline things, give myself the ability to take news bits and read it in my voice and my perspective, it helps me shape my opinions. But I am always cognizant of this stuff. Anything that I write, this is the last thing I'll leave you on. When I write something, particularly an argument about the financial markets, I always will run something through Claude or run something through ChatGPT that says, what are the fallacies of my argument? What are the holes in my argument? What are the things that I need to address? And then what I do is I basically will ask myself, we'll ask it, what do I need to do to improve and structure my argument? And then I go through that process. And if I disagree with it, I reject it. But, again, this is all about improving content quality, improving decision making, and ultimately, particularly as a trader, coming up with better ideas, faster ideas, things that I can test. And rather than having to go out and do the really intensive work of trying to find the different, ideas, having something help me I find things and do it quicker, and then allow me to test it and start to analyze the numbers that I know. It cuts the short time. I mean, it really is an assistant to your life. So we'll dig more into this stuff as we go. I hope you guys have a great day. We have a full day of content coming up. Click the link and also check out Don's replay later today if you have the time. I will talk to you guys later. I hope you guys have a great day. Take care.